I'm doing great. How are you?
Absolutely wonderful.
Nice to be with you, gentlemen.
Likewise.
All right, it looks like we got everything under control here. It is now exactly 11:30 on the dot, so let's get started. And once again, welcome everyone to the KoreSummit Webinar Series 2021. My name is Oscar Joffrey. We're really excited once again to have another great topic that I think it's pretty exciting. There's never been this kind of discussion point brought up before. So today I'm going to be joined by two individuals who are going to bring some eliminating component to the discussion. And of course, there is obviously for everyone, just to keep in mind that there's no PowerPoint presentations. This is really more of educational component. There'll be kind of 15-minute Q&A. And of course, all of this is live right now on YouTube, on our YouTube channel, or you can go to KoreSummit.io to view the recordings. So let's get started. Let's learn about our panelists, each one of them. Let them introduce themselves shortly here, and then we'll dive into the big topic of this morning's conversation. So, Walter, please.
Good morning, Oscar, and thank you very much for including me on this very interesting subject matter. Very interesting. So my name is Walter Greaves. I work in a company called GoalX, and we are a strategy and marketing firm focused on equity crowdfunding. We were born by necessity. We invest in and build our own companies that we seek to take through to exit. In the equity crowdfunding space, as we were doing this, we noticed that financial marketing and strategy were the most important components in a successful equity crowdfunding campaign. So we built the capacity to do this for our own companies. And we look to provide this service to a certain number of select additional companies which fit our standards. And we're fortunate enough to work with KoreConnex, and we've been very thankful for the relationship and appreciate the opportunity to talk with you and Kieran on this subject matter today.
Great to have you on board, Walter. We're going to have a great discussion. Dr. Garimella, please.
Hi, thank you. This is very exciting for me personally. My name is Kiran Garimella, and I'm the Chief Scientist and CTO for KoreConnex. And this is a space that we have all been following for many, many years. So I come from a finance and technology background for many, many years. And I've been with the large companies in an executive capacity as a CIO formerly for General Electric and so on. And but this whole space about stable coins is absolutely so exciting. So we have a interesting viewpoint here too. So love to engage with you all.
Wow, I can't believe you did that. So you took away the thunder, you put out the subject matter out there. You bet. We're going to talk about stable coins, but we're going to put a really interesting twist to the stable coin discussion, because when people hear that, typically they only have one view of it, and what we're about to bring up is very, very different from that. So looking forward to having this discussion with each of you. So, but before we do, let's bring everybody into the context of what is a stable coin. I'm gonna, put each of you in kind of the hot seat. Everybody's reading about stable coins right now, and then we'll dive into the stable coin under RegA. So, Karan, why don't you start us off with that, and then Walter, I'll be coming back to you on that as well.
Certainly. The traditional way that people have thought about stable coins, and when I say traditionally, I just mean in the last few years, that is tradition in this fast moving space. People have thought about stable coins as thinking about, hey, cryptocurrencies, they're so volatile. And what can we do to prevent that perhaps, right? And so to make that much more stable and, keep that. Now, unfortunately, the messaging and the way it's been structured can be slightly confusing. On the one hand, people thought about the stable coin as removing all the volatility and reducing the volatility risk. And on the other hand, people are saying, well, if it is stable, if it doesn't appreciate in value, or where are the opportunities to trade on that? So we've seen a lot of the interesting ones come out there, and there are stable coins with no stability behind them or backing behind them. As we found out, there is a significant deficit in the reserve that's supposedly backing the stable coins. We have seen stable coins for all kinds of, backed by gold, as an example. I met one gentleman up in Chicago once who wanted to put up gold as the backing for a stable coin. So you kind of wonder about what does it actually offer in terms of the value? And there have been very interesting twists to that one, especially with Libra and some of the companies like the Tether and companies like that. But I think that is sort of the general background of where the stable coins have been coming from and headed. But we have a very interesting dynamic and very interesting way to present what we have here. So at least I will stop there and give water.
Well, good, because I thought you were going to derail me again, and I go, wait a minute. I thought first let's educate people on our knowledge. Walter, obviously you've had some exposure to this. You and your team have dreamed up different components of watching the blockchain space and stable coins. Love to hear your take on stable coins as it sits today before we dive into our topic.
Yeah, absolutely. And I just have learned so much from Dr. Garamella and you, Oscar, in expanding my thinking around stable coins and also simplifying stable coins. I think that for me, it's as simple as thinking about a share. And I'm a stock guy. That's kind of my background. So I kind of think in those terms. So for me, understanding that, this was just a share of an entity that was issued on the blockchain. And then with that issuance and with it being on the blockchain, all of the advantages of, quote unquote, crypto come into play. We always steered away from the unregistered securities, the crypto side, just because we were concerned about long-term tax liabilities and some of the projects that we had. So we literally waited 7 years until KoreSummit and the SEC caught up with the needs that we had. So I started with this, so it's a share on a blockchain, and then it's a share on a blockchain with particular advantages and use. In this case, if it becomes a cash-backed asset issued under a RegA, and it can be tethered to a underlying currency, it now has become a real digital currency, something with backing, something with a value. And then the next step is usability. And so usability comes when that share or that that piece of an asset can be utilized in a community, in a network of individuals. And so those are kind of the things that we were looking at, and really the Oscar and Dr. Garamella helped us out. And we'll get into a little bit later. I'm sure that Oscar has some more, but that's kind of just a real simple way that my small dinosaur-sized brain had to understand in order to make this work. It gets too amorphous sometimes in the conversation around white papers and blockchain. In reality, I think it's relatively simple from a function standpoint.
Yeah, I mean the goal was here right now. Just the whole thing, as Dr. Graham alluded to, there's a lot of discussion on stablecoin. It's backed by something. But there's something that constantly comes at me. I'm not old school or anything like that. I get it. People are finding different creative models and all that. But, when you put the word coin at the end of anything in my world, and it's a currency, my question is really simple. And I often ask is, what is its purpose and how can it be used? And to date, the only usability is to trade. And well, that's not usability. And I think what has started is fantastic. Now, like everything else, the same way that was new, innovative, what we're about to have this discussion today is also new and innovative, because we're taking that same concept of terminology and we're turning it on its heels and saying, well, wait a minute, why can we not have a stable coin that can function, backed by something so people can trust it and have a functionality as well, and I say and be able to trade. I mean, those are pretty exciting things, and it's interesting, that beneath it all, it's like anything else. It was right there for the taking. So obviously, those who are listening in right now, they're probably one scratching their head, like, what are these guys talking about? So we're going to dive into the discussion for today, how to create stable coins utilizing Regulation A+. And you're wondering, well, wait a minute, stable coin is a currency. Regulation A is a regulation. It's a security. Yes, but there is something that we believe that a lot of people have overlooked, is that stable coins still have a regulatory kind of fogginess on the side, that you never know when the regulators may or may not pull the plug. This uncertainty about taxes, as Walter alluded to. So, now we're talking about RegA, and RegA is a security. So we're not going to go into the full regulation, but we're going to talk about how to use it and where it's its purpose. So we're going to start with that discussion. Corinne, you and I, and Walter, we're all having this discussion right now because this is a new model that a company could use it and utilize it for their business to, I know what you're thinking, raising capital, but you need to think a little bit bigger than that in order to understand how this could impact. So let's start with the framework first, Corinne. Let's start with the framework of using RegA for the stablecoin. And then, Walter, you and I will hop into, okay, now you got it. How does it work, right? How does it work in the mall? So, Corinne.
One of the most interesting aspects, RegA, as many people know, and we just want to reiterate, it is really to democratize capital and capital raising and allow participation by a lot of the retail investors. And so we have this whole framework about RegA, and Oscar, I'm sure you can talk about the limits on that and all the intricacies of RegA and RegA Plus. But the wonderful thing about RegA Plus is that it's a great security for the retail investors in the private capital markets. And there is going to be, and there is already ways that we are looking at now, where there's going to be trading capability and a tremendous amount of liquidity being built up by various types of mechanisms against the RegA. So under that background, one of the wonderful things about the RegA is that it's a fully regulated instrument, and it is protected by all types of compliance activities and broker dealers, standing behind that, SEC filings and so on. So this whole risk about cryptocurrencies and how they arise and what exactly is being backed and who's behind all of that stuff, that uncertainty is going to go away, right? And then you still have the RegA. Now the challenge, of course, is that RegA is deemed to be a pure security, but then what are its usages, right? Of course, there's investment. There is investment potential within that, and there is trading potential within that. But if you take that framework like that and say, now, how can we marry that with the whole concept of stable coins and the usage and the utility value of that? I mean, that's where I think things really get interesting.
So what we've obviously gone through these discussions. There's already been a filing. So in full disclosure for everyone here, there is a filing. This is no longer a hypothetical. This is an actual. So it's been modeled on our environment. There is a chain involved that has been built on, and more importantly, it's full functionality components. So what we're really saying here, if you really listen careful, is that there's a regulation that's been presented at us So this is the important part for me. So I'm just going to recap from technology, and I'll come back to you, Walter, is that here's a regulation that allows you to raise up to $75 million. Fully compliant with the SEC, you'll be qualified, which you could make into a stable coin and to allow it to have movement within, I'm going to use the word mall. And I'm going to go into you, Walter, into this one, because we've had many discussions. We'll talk about the backing of it as the next part, but let's talk about the mechanics of the mall. So the mall is, I have now, it's like when you own a share in a company, you got it. You can you go around to a mall and hey, listen, I own 10 shares of this company. Will you buy them? It's a little different. But when you got a coin, let's call it the HIN coin just for now, for this discussion only. But we got the HIN coin. The HIN coin's in this mall. How does that all play out, and what is needed in order to make sure that currency has a play and with all the constituents involved in
it? Yeah, I appreciate you using the word mall, Oscar. It helped me get my brain around this. I'll take a step back to start. As we look at equity crowdfunding, the companies that are most successful, they have a user base. There could be a bar with a bunch of patrons, a tequila company, they could be an online network, but a lot of the successful companies, they have a bunch of fans, they have a bunch of customers, preferably tens of thousands, hundreds of thousands, and those people become investors. They become partners in a project that they love. And they're the best kind of investor you can have because they're fans. They're not like a VC who is, looking over your shoulder and trying to maximize their interest in your company. The fans just want to see you be successful. So I think that's one exciting component of this. Now, when we're talking about here is having these fans buy shares of your offering that are offered under Reg, C, Reg D, Reg A. In this case, we're talking about Reg A. So those shares are stored on the blockchain with a company like KoreSummit that has, a revolutionary transfer agent that's moving so far ahead of what was standard paper. And then you now have these shares on the blockchain. Now, as you step further, like we talked about, if you identify a portion of those that are going to be issued and they're cash or cash equivalent backed, and they are pegged to a currency, you now have created a digital currency under Reg A. Now, what's the use of it? And that's a great question. I mean, to me, scarcity is a value of commodities, not a company. So I think you make the argument that Bitcoin, Ethereum, they're kind of behave more like commodities now than actually a backed company traditionally. And we could talk all day long. Like, look, I love bubbles. I love chasing bubbles. It's great fun. But at the end of the day, it comes down to some usability. Now those cryptocurrencies, and my terminology may not be 100% correct, so forgive me. They have usability that's developing, but there's a lot of challenges around it. They have to be converted into cash. They have to go through brokerages. They're unregistered. It's difficult with taxes. So there's some challenges that change when you filed under Reg A. So if you have this, say you have a restaurant and you've issued coins or you issued, digital securities that behave like a currency, like we're talking about stable coins, and you issue those to your patrons. Your patrons could use those coins in your restaurant, the stable coins in your restaurant to pay for things. And theoretically, if you had some other people on your network that were inside the KoreSummit stablecoin transfer agent network, those other people could pay for as well. Maybe you have a vendor. Maybe the guy that's bringing pickles in is on your network, and he's willing to take the stable coins, which are cash equivalent and which are transferable directly into cash without the intermediary. And beyond that, you issued these coins, so you're the bank. And there's a merchant processing capacity to these coins, and thus the opportunity to behave as the bank and charge some sort of a reasonable user fee for doing this. So it starts out very simply. It's just a share. It's like a piece of paper. In this term, it's on the blockchain. And in this term, it's been registered backed by cash, and it has been pegged to currency. I mean, look, like currencies aren't supposed to be volatile, right? So we have this weird thing where we have these digital currencies, and the volatility is insane, and imagine if it was the underlying currency of a country, how difficult that would be to transact on a daily basis. So I think you've got Tether, which Dr. Garamali brought up, and obviously that's a little bit more stable, pegged to the dollar. You can see it behave. It's used in interesting ways. But that's kind of how we see this function. And it comes out with the community. You have to have a good community in the beginning. First off, I think to have a successful equity crowdfunding campaign, it helps a whole lot. And secondary, if you're going to be issuing a stable coin, someone has to spend it on something. It can't just be a promoted asset class that people chase and trade. It really, in the long run, it has to have some sort of use and some sort of adaptation by a group of people in order to be successful.
Yeah, for some of us, I mean, in particular for myself, I remember, I call it the mall because if any of you have ever heard of West Edmonton Mall or the Great American Mall, imagine the malls, they're all trying to learn more about their patrons coming in the store. And so what do they introduce? The gift card. Well, why buy a gift card if I already got my credit card? There's no value in that. And so in this scenario, it's a little bit more that you started touching in there, Walter, which is you become the merchant. That's right. You become Visa, MasterCard, but it's now a coin that you now bring under your umbrella. You create a merchant services on the side that will charge a fee. You'll be competitive, of course, to everything else. But more importantly, you are in control of that mall environment. And then what you want to do is encourage the movement of that coin. And the beauty why this is so exciting is that because Regulation A allows anybody over the age of 18 to move it. Therefore, unlike other stable coins where there's always somewhat of an uncertainty, or like anything else, everybody wants to get in, but they're not sure. There is surety here from every aspect because one, qualified by the SEC, two, it was sold under the securities and it moves within parties, always following underneath it all the securities element. To the individual, it's like paying by cash or debit or Visa, MasterCard. And you, as the operator of the coin, you want to encourage the movement. You want to have more people in the mall. So I like the one Walter brought up. You want a restaurant, you buy pickles and you buy pop, you buy supplies. Well, the goal is to encourage all the merchants in that ecosystem to understand that if they accept the Hind coin, they will be able to have the comfort of knowing that it's been back to $1. So it's no different than accepting $1, from US dollar or anything like that. But now, when each time that transaction occurs, the merchant services is collecting their fee. So this is something that has been very interesting throughout all of this, is that the way the stablecoin works is that it doesn't immediately bring in the cash to the company other than the fixed one-time use rate. And so we're going to cover that, but it's exciting. So you got a security that we now call a stablecoin that now you already sold it to a crowd. You can now enhance the crowd, build a mall. And if you don't know how to build a mall, there are companies now coming out to teach you how to create a mall. And we're calling it the mall, or you can call it the marketplace, where you bring everyone together to make sure that that currency moves around with trust and all that, and you're the merchant services in the middle. Just think of what Visa and MasterCard and eDebit all did. That's what they did. So to make that happen, obviously, Corinne, it comes down to the processes that, from a technology perspective, I want to just dive in a little bit of that, and we're going to get back into more the high level element of the user experience.
Oh, absolutely. And but I can't help sharing with everyone the analogy and the image that popped in my mind when Walter was talking. And the image that popped in my mind is that of having a Ferrari in your driveway. You look at this and you might use a Ferrari to drive at 30 miles an hour to go to the grocery store to pick up a jug of milk. Okay, but is that the best use of the way Ferrari? I mean, is it where all the real, pizzazz is for the Ferrari, right? So what we're seeing now is an instrument that has all the potential of some really fascinating things that, we will cover this as we kind of go forward. The whole, the NASCAR, the racing, and all that wonderful stuff that you can use really for Ferrari, have exciting times. So that's kind of where I think we want this stablecoin to be, and it has a potential, and we're seeing that. But to Oscar's point, there is a method of how we actually create the stable coin, and there's a whole technology process behind that one, right? So there are various pieces of technology that are used to define and create, manage, and use the stable coin. So if you look at the entire process flow of how this happens, we basically have the people who own the stable coins, the people who put it out there, the merchants, the retailers, the outlets, where this can be used, the mall, the stores in the mall, so to speak, the virtual stores in the virtual mall, right? And all of that happens, and then there are the processors behind all this, the guarantors, the stability guarantors, right? And the security handling of this as a security to make sure everything is compliant. So all of this is, predicated on having the right technologies, such as, the blockchains, the permission blockchains, the compliance portions of that, the management of redemptions and transfers of the coins. So all of this, there is a process for doing that. On one hand, you're creating the usual RegA securities, and then you're pegging that with a stable coin. All of that, of course, created with smart contracts to make sure all of this is, pretty stable, so to speak, from a technology perspective. And I mean, we can go into a lot of detail on this one, but I just want to at least give the overview of how that process might work. And here is other interesting part. On the retail side, it can be a mobile app that people can use, and all of that is actually connected with the compliance architecture of a Reg A security regulation. So these transactions can happen like a credit card at the point of sale, so to speak, but with all of the backing and the compliance behind it that will make sure that this is not misspent in any way. I have a lot of other things to talk about, but I want to stop there because I can go on for hours on this one.
Yeah, no, it's an important aspect of it because people are going, but securities, doing any type of transfers and all that is very difficult. It actually isn't. If you got everybody under the same infrastructure, to the user, it's got to be simple. It's as simple as, I bought some coins, I want to use them, right, or I want to trade them. We've been talking about the usage part, which is an important element of it, because from a user perspective, there's nothing worse than having something and then waiting for it to go up and down. But here, I got something that's worth $1. I'm going to go to the merchants that are in this mall. So when the company provides this coin to their community, has two functions. It can either work in their mall, and there's something that Walter brought up that really lit up his lights a few times when we discussed. So remember, underneath it, it's a RegA offering. So we got a hint coin, and now we got the core coin. And this is where it gets really cool here, where you can now have interchangeable coins between two holders. Interchange it. I need some core coins to go to that because that's what they take. Or we can even get the merchants to cross-reference to accept the coins. And then what we're really doing is transferring of securities between holders. But again, it's all smoothed out. But I cannot stress the importance of the creation of them all. Everybody's probably jumping up and down. Oh, I'm going to do a $75 million stablecoin offering. It sounds easy to do, to file. There's a cost associated, of course. But the real key, Walter and I have been talking a lot about this, there is the point of you got to give assurances. So I'm a merchant. Walter, I love the hint coin. I think it's great. How do I know it's worth $1? What's my assurance that it's worth $1? And this is where the real key to this is that when you're raising this capital, it needs to go into this pool It could be a bond, it could be a real estate, or it needs to be something liquid that if people need to cash out, you need to pay out, right? Obviously, it'll pay out with one less your fees, of course, because the merchant will always make the capital in this, and then you can reissue more coins. So let's talk about that a little bit. The merchants are the ones that are going to need to trust it. We know the buyers are going to buy it. That's easy. I think that's the easy part. I don't think that's going to be too challenging if the company's got a good brand recognition. But the real key is getting the merchants to buy it. And for them, it's all about stability. I want to get paid. But at the same time, from a merchant services, you want to keep encouraging them to keep using it. But the only way you can do that is by getting one merchant to the other merchant to the other. And then, of course, the stability of backing it. And we've been talking about different backings, and your expertise in this area is quite, so I'd love to hear your comment on that.
Yeah, thank you, Oscar. You brought up a lot of good points. I always try to steer, oh, hang on, sorry. I always try to, sorry, the call come in. I always try to steer back to what is most simple. And that's just kind of how my brain has to get around things. You know, I'm fortunate that people much smarter than me around me. And, you know, the conversation about the HIN coin that Oscar brings up is from a company called Hot Import Nights with a gentleman named Mike Munar. And we've worked together in that company for a long time. And, you know, 7 years ago, we came up with a model for creating exactly this type of a thing. It would be some sort of a digital currency that could be used in a network of people. In this case, it's a combination of live events, it's a combination of vendors, and then there's online platforms as well. And the idea is, like, how do you create a digital currency that can be used amongst that group? And so originally we thought of it like, think of it like miles. You know, you use a credit card for your airline's giving you points and giving you a currency that you could use. And that was what kind of the first manifestation that we saw with this was. That's our brains were thinking about it. And that's what we were working on with Oscar. And so you're motivated to use your card because you get a benefit from it. And there's a network of people, and then there's a group of vendors that will accept those miles. It might be a hotel, it might be for an airplane ticket, it might be for a beer, you know? And, you know, that mile, evidently, there's a transaction with the liquor company that's supplying it. There's a transaction on the back end there. So that's kind of like how my brain has to think about things to make it tangible. Now, from this element, moving forward, so if you've created this stablecoin and you have a network of customers and then a network of vendors, you can incentivize people to use your stablecoin instead of $1. You know, if you say, hey, look, I'm going to give you like this service, this product is $1. If you use a stable coin, it's 95 cents, and we give you 5 cents of incentive on it. And you're able to do that because of margins. And then with your vendors, it's the same thing. Hey, if you want to come in and use the stable coin, I'll offer you a discount. It's an incentive for your customers. So that's how people are. We love coupons. We love free stuff. And, you know, in this country, you like getting deals. So that's part of the psychology and the network that you have to build, is coming in and building this community and then incentivizing the community. And Oscar brings up a really good point. Like I said, I love bubbles. I love hyperinflated assets. I think they're amazing. You know, I spent time on a trading desk, but at the end of the day, it comes down to functionality and usage. Like Dr. Curl say, you know, it's like a Ferrari, and you're only using the trading element. You're using the hyper upside of the digital currency. It's not being used in a community. And here's the other piece. Yeah, you can use Bitcoin now through Visa. You can use Bitcoin now through another person and an exchange. There's 2 or 3 people that have their hands in that transaction, including Visa. When you've issued your own stable coin and it's registered and it's backed, you're Visa at the end of the day. And so, of course, Visa and all those guys love Bitcoin because they're getting a piece of the action. In this instance, the way that I see it, and we're modeling it, you end up becoming like Visa, and the merchant processor is taking your payment directly. Is it Visa, MasterCard, or a HIN coin? And that's what's exciting for us. And that's really why we waited. We were so excited by the potential of an SEC registered, cash equivalent backed digital currency being used in a community the way it was meant to be. We always knew the SEC would catch up at some point, and that's what we're seeing now. You know, when companies like KoreSummit are on the edge of this with some other great service providers really pushing the potential of this from a technology standpoint. You know, I've literally been waiting 7 years to have this conversation. We were laughing. My partner Russ Urban is my other partner, our CTO, who works with Dr. Ramali and Oscar. They're just so much smarter than I am. But we're just laughing because we've all been waiting forever for this to come, because we knew there were limitations with unregistered security. At the end of the day, digital currencies that are unregistered will always be unregistered. And sure, you can get a middleman to take them and treat them like a commodity. It's no different than buying with gold. You can buy with gold or Bitcoin. You got to go to Visa, they got to convert it. What we're excited about is this next level. It's fully registered, fully transparent. Every share, every coin is registered. The IRS loves that. The SEC loves that. And I like three-letter agencies happy with me personally, you know? So, and that's kind of the excitement around this and the community and where we see it going. And yeah, obviously it's so exciting. You know, we've been waiting so long for this too.
Yeah, Walter, I think you said it best, but you said it so quickly. I'm not sure people caught it. Just want to double click on something you just said. You know, it's an SEC registered, fully compliant digital currency, right? And I want to unwrap that a little bit and talk about the reason we have cryptocurrency is because there is a perceived amount of different types of stability risk, for example, or inflation risk, or away from compliance, being able to, so currencies generally, whether they are fiat or crypto or bearer instruments, right? Anybody can take that and, you know, they don't come with any, you know, backing. It is there, you just use it and you're done. Securities are they are bearer instruments, right? So I mean, they're non-bearer instruments. In other words, you know, you can pick up somebody else's securities and trade them freely. Unfortunately, because it's what they are, the convenience of currencies is not present in securities. In stable coin, and to drive home just what you said, Walter, we're marrying the two. We're bringing in place all of the convenience of being able to use it in various outlets so easily, just as if you exchange a dollar or a credit card, but with all the protections, all of the backing of securities, right? I mean, that I think is very powerful. So I just wanted to share that.
Yeah, you know, this discussion, we clearly need more hours. So, but I want to give everybody an understanding. So first of all, I know everything you read about stable coins is backed by something, gold and all that. In this case, when you're raising the capital, you're going to become the backer. You can use that capital to put it in a bond. And we're looking at other models. Walter's team is thinking some really creative. You need to have a finance background to come up with this. But the beauty of this is that you are then creating another entity that becomes a merchant services. So you become Visa, MasterCard of your own world. I mean, this is pretty exciting. And then, of course, you got your audience that is incentivized to buy your securities, which is now a coin, and can now move around that marketplace mall. And every single time somebody uses it, you get paid in a coin. So I'm going to give you the math. You've issued 100 million coins, and every single time you get 5%. So you take 5% of the 100 million coins. That's what you already made in the very first time they use it as a merchant services. Every single time it gets used again, you make another 5%. And eventually, what you end up happening is, yes, there will be some people that will cash in, but you're always there's a model where you end up making more, and you can give out a dividend as well in a form of a coin to the ecosystem. So this is going to be a very interesting model. And there, as Dr. Crane keeps alluding to, it's like you own a Ferrari, you're only using bits of it. There is secondary market trading for the stablecoin as well. So it is a RegA, therefore there is a marketplace, a true FINRA registered secondary market to trade this particular security or stable coin under the regulation to everyday investors, fully compliant. So you can buy it, you can use it, and you can sell it, or you can trade it. It changes the fundamentals, and in particular, when you think about where you can be disruptive. There are many different areas where you may see this as a disruption. It's beyond points. For me, this is way beyond points. This is points on steroids. Like points is sort of like driving a Ford Pinto, for those of you who may remember a Ford Pinto. And now we're giving you a Ferrari to go with. And the key is, the important thing is now, and we're going to see models like this for very interesting markets like cannabis. And people go, well, why is that? Well, to most of you may not know this, but cannabis there's a big problem where the merchants can't use Visa, MasterCard, so they need a way for Walter to pay for the goods. And they need something that's stable, right? That stability of having that currency. If you own real estate, you own them all. You are almost the ideal candidate for these scenarios. Or as Walter alluded to, Hot Import Nights, which has a large community of not just stakeholders to attend the events, but they also have relationship with vendors who up until now had no visibility into that. So you've got to look at all the different upsides component. You become a merchant services provider, so you become alongside Visa, MasterCard. It's your coin, Visa, MasterCard, right? And you obviously will offer the better rate. You want to encourage that. But not only that, you actually get to know more about your community than you did before. You get to know what's happening within it, so you can actually anticipate how to work with it. And the nice thing about RegA is that 1 year you can go out and raise 75 million. The next year you can go back and raise another 75 and another 75 and 75. And it's an amazing kind of attribute that's been enhanced into this regulation. So, I'm going to post each of, I'm going to play devil's advocate on the other side, which is obviously anybody who's listening in on this conversation is thinking, well, wait a minute, how is this thing going to work? It's flawed some way here about the money flow, because how can a merchant make money in this model? And so I'm going to go to you first, Karen, and then I'll go into to Walter, please.
Making money on this, there are various ways, that we can think about this one. Now, obviously, the one you're thinking about is how can I, obviously there's going to be a fee, there's going to be a commission, there's going to be, some percentage of that, and there's going to be some part of revenue share going back with the provider of the coin, with the merchants, and so on, obviously, right? There are many other ways that people have not thought about this one, where you could be providing all kinds of, the provider or the merchant, vice versa, can be providing various types of incentives to each other through contracts that are based on the stable coin, saying that, hey, for example, right, this is a coin, let's assume, on motorcycles. It's a motorcycle fan club, the Harley Davidson. Let's think about that as an example. So there are venues out there, events where people want to go and meet each other and have, racing parties or whatever they want to do. And there can be so much incentives that people can trade among each other. So people say, if you come to my event and get your fan club to participate in my Harley event, here's the discount that I can give you. And that discount is applied through a smart contract to the other merchants, and vice versa. There can be a lot of these flow exchanges that can be going on. But having said that, you may say, well, we can do the same thing with even just regular, currencies too, right? Here is the difference. Number one, you are branding and rebranding for a particular community. There is a pride within that, right? So that's one big thing. The other thing that people, don't realize, and this gets me very excited, because I'm a machine learning, data analytic kind of background, right? That's what every time there's data and analysis to be done, I'm just ecstatic about it. So every time a stable coin is used, one of the wonderful things that comes with a stablecoin as it moves from one hand to the other, from one account to the other, is the history of the transactions and the behaviors behind that, right? And there are many, many ways that each of these merchants, each of the participants can leverage that data analytic capability that's really exciting. So I just want to stop there because again, I can go on for hours on this piece too, but see if you guys had some comment or something on that.
Well, I think what's going to happen here, this is the early stage. Once we get through and start putting them out there, people will start getting the idea. Walter, coming back to you, obviously, this has been something that you and your team have waiting for a long time. Obviously, I remember when our first discussion, you had thousands and one questions. How does it get back? That's a very good question. Let's just talk a little bit about that. How does it get back? I mean, this is one. Remember that the money's being raised and to back it, and that's the backing of it. But what instruments companies could potentially use, and we're still in the early stages, of course.
Yeah, absolutely. I think this is a fascinating subject matter. Derivatives are such a big part of the world out there. I think there's something like $240 trillion of debt derivative instruments around the world issued against a much smaller underlying actually set of net assets, hard assets. So I think what's very interesting is figuring out how these coins will be backed, how they'll be securitized, and what type of leverage can be generated off of these. These are fully registered, fully SEC registered. I mean, the RegA is the same as an S1, except you don't have to defend the bid and trade afterwards. That's what's so exciting about it. All your shares are fully registered with the SEC with all the advantages that brings. And, talking about the secondary market, that's why you see your Airbnbs of the world and other companies, when people want to get some liquidity, they're able to trade on the secondary market because there is registration around these. Registering your shares under Reg A and moving down this road even further creates an even more liquid digital security that can be traded on an ATS. So that's really what's coming, and it's coming very quickly. What we're trying to figure out with, this is going to be partly from the SEC and partly from us, I think, being creative together as a community. How can you back these? Sure, cash is an obvious one, but there's other securities out there that are equivalent to cash. They're called cash equivalent, assets. And so, what does that look like? Is it T-bills, SKR notes? Like, how does that work? And what are the implications for the amount of leverage you can get? And then the secondary thing is, with these digital securities, what type of secondary derivative instrument can be created against those that they guarantee? So that's kind of what Oscar's alluding to as the final frontier. We spend a lot of time out in fantasy land thinking about what could happen and what's going to happen. And I think that's part of what this is. It's getting ahead of where the ball is going to be. And so I think these are fun conversations to have. And there's a lot of answers out there because there's a ton of precedents. And we talked a little bit about cannabis. For me, I've worked in the gray market industries such as that. And the issue you have is the people that are willing to push the boundary the furthest win. So the people that are willing to push the laws, push the mining laws, push the laws around, I don't want to use the word money laundering, but how they bring their Bitcoin back in are the ones that are winning. But it could be a short-term thing. It's problematic. For us, that's challenging because we try to work as regulated as possible. That's why I love the idea of the full regulation. If I'm fully registered with the SEC, if all my shares, all my stable coins are registered, every transaction is out there, then the people that are winning are the people that are the most registered, the most innovative. And over time, that's important in this business. And that's what we really like about this. So with all this SEC registration and opportunities, another thing happens. Now, pension funds, mutual funds, retirement funds, grandmothers, young investors can all invest in the security directly through a broker dealer that's qualifying for it. And that's exciting too, because at the end, that's like, what do we all want? We all want liquidity. Liquidity is the most important thing that you can have in a security, in a stock, in any type of digital security on top of that. So that's what we're really most excited about, is staying on the 100% transparent, 100% registered side, because I think it's us. A lot of us come from a Wall Street background. A lot of us come from investing backgrounds, entrepreneurs. And, I think that we all really appreciate that the opportunity to operate in a very regulated environment. And it's something that's counter to, look, I love the idea of Bitcoin. I think it's the most amazing thing in the world. I love cryptocurrency. I love the freedom they bring, but we live in a world of three-letter agencies and taxes and IRS. And you know, that's probably what they're going to be. I mean, we can get into this conversation, it's philosophical, but the way we see it, the more registered you are and the better the asset classes and the registration of your digital security, the greater the adoption and the greater the usage will be.
No, I agree. And today we're just getting the discussion started. I mean, this is the very first time we're bringing this topic in the airwaves for people to start thinking about it. In other words, we could be your partner. You'll see that our infrastructure using our chain has been cited in a document with the SEC. So there is a mechanism, but it's not just that part. It's all there. You know, people can say, "Oh, I can do that," and I'll do, yes, you can. But there are other elements to all of this, and that's the exciting component to it. So we're getting to the part where we reach out to you now. You are listening to us having this amazing conversation. We may not have all the answers, but put up your hand, click the button right below there, raise hand, cling, just like that. See the pretty hand like that, and we will do our best to answer your questions here. All right, Roland, we're bringing you in.
Hi, guys. I just I understand the incentive for the user of the coin, that there's a 5% rebate, if you like. But going back a step, if I invest $1,000 into the RegA Plus, I get, you know, digital assets or shares. But then if I spend that $1,000 in the community, what do I then have? Is that then gone once I've spent it, or do I still have some shares? Because I can't sort of figure out what's my incentive to buy the $1,000 worth of shares in this RegA Plus if I just get a 5% rebate.
Great question. Really good one. So the one thing that the stablecoin under RegA brings is that we talked about them all. You need to have a community. So we're going to talk about Hot Import Nights as an example. They have a community already of followers, hundreds of thousands of them that come to these events. So the incentive is that if they buy the coin, they're getting it at a discount. So if the ticket was normally $300 to come to a weekend, sorry, $500 for a weekend event, now they're going to discount it if you use your HIN coin. So the idea is to encourage the first buyer by incentivizing them by obviously another way. They're not really buying shares. You're not selling to them as shares. You could do an offering where if you do 75 million, you raise 50 million for the coin and 25 million in equity where they hold the equity, or you can do one, you know, you buy $1,000, you get 1 for 1. You get 1 coin and 1 share. The share stays, that's where they gain the value, the return, and all that from an equity stake. A coin is just a coin. It's going to move. They're getting it to use it in the mall. The mall, when you're presenting this to the potential buyers of the coin, they're going to say, the reason I'm buying this coin is because, Walter, I love the Hot Import Nights Mall. I love it. I can use it with that merchant A, B, C, D, E, F, G. So you've given me a reason to use it, and the incentive is going to be, you've got a discount already because you're going to be attending the event. So you're already ahead already, and there's not going to be any fees associated with it. So there's not going to be an upside from a share value because you got 1,000, you used $1,000. It's no different than you get a paycheck of $1,000. But the reason why you bought these coins is because it's giving you entrance into the mall. That's really the key behind all of this. Richard, we're bringing you on.
Thank you. Could this coin facilitate T+0 trading in a financial mall, for example?
Karan?
Oh, sorry. Yeah, no, absolutely. And this is why I too was highlighting the fact that the convenience of using this as a currency is now married with the advantages of having secondary trading, T+0 trading in the on the security side as well, right? It's a marriage of both.
Sylvia, you had a question. You're on mute. If you unmute yourself there. Okay, I think hopefully she'll she'll get her microphone going. Listen, I'm sure all of you have 1,001 questions. We do have a model. It may not answer everyone's question, but the idea is to Walter's point. Look at that. They've been looking for it for 7 years. It's finally here. See, it's a journey that takes a little bit of time, but it is exciting. I mean, think about it. You've got to really look at it in a very different point of view. The way I look at it is, I can tell people it's a stable coin and you can use it. There's no other cryptocurrency in the map right now. Obviously, inroads are being made that it's going to happen. And there is something really interesting about this particular stable coin, unlike any other. The user doesn't have to pay any fees. There is no gas fees associated. There is not we don't call it a wallet, but it's going to be an app. But there's none of that is going to be associated with it. They're getting $100 worth. They get $100 worth. They don't have to pay some miner to mine to make the process. So we understand the friction of money, and there and in order for this to work, it just needs to be fluid. But anybody coming into this, the first starting point, as you all know, when we talk to you regarding your RegA and you want to do a stable coin, we need you to speak to an expert who can help you build a marketplace or a mall. Because without the marketplace or the mall, Roland, you had a really good question. Why would anybody buy my coin? You're right. Why would anybody? Just because you're saying you got a coin, I'd rather buy your shares, Roland, because at least this way, you know, when your application is up, it's going. But it's when you have a mall already, or you've created one or working towards one, that it really brings out this opportunity. So, Sylvia, were you able to unmute yourself? It doesn't look like she's been able to do so. If there's any other questions out there look, we're easy to find. Walter, obviously he's coming in at it with a really interesting perspective. Dr. Karan and myself, we've been knee deep in it, creating documentation around this. Obviously looking forward to speak to many of you about it, and look like Sylvia may be ready now.
Yes, hi, good evening. Oh, sorry, not good evening. Oh my God, I'm way ahead of myself. Good afternoon. I'm calling from New York. I was forwarded this Zoom link to attend, and I wanted to know some information, some basics about the Bitcoin. Is this just another version that's being created? And is there a way to invest, or how is it to get involved? I'm sorry, I was multitasking, so I don't know. All of this was discussed on the Zoom, or this webinar replay will be sent to us. Is that possible as well?
So I'll answer the first part. Yes, the webinar is available on YouTube, on the KoreConnect channel. It's also available on the KoreSummit.io website, all being recorded. And I'm going to let Dr. Cohen answer the question about the equivalent to Bitcoin and all that, please.
Well, let's see. How shall I say this? Comparing a stable coin in the way we are describing this is as different as Bitcoin as moon is to moonshine, right? There's absolutely no comparison. Bitcoin is not backed, it is not stable, there is no regulation behind it, and you don't know what's going to happen with it, right? It can go to 100,000, it can go down to zero, we never know, right? And its only usage is in being able to exchange it between two different parties, and that's it. On the other hand, a stable coin, it's regulated. And I know people have this philosophical issue about, hey, it's regulated, I don't want regulation. But take the positive side of regulation, it's protection and it's stability. It's all of those protections that you get from that. It's all of that. Plus, there is a usage value. There is a branding behind it, it's a usage value behind it. And there are a lot of other benefits, securities related benefits, and the convenience of cryptocurrencies attached to that one. So this is a complex topic, and many people are still trying to wrap their heads around it. Happy to have more discussions on this front, but it's very, very different.
Thank you, Karan. So on closing remarks, obviously, Walter, love to hear your closing moments on this subject, and then Karan, and then obviously we are going to move on to the next KoreSummit webinar, please.
Yeah, thank you, Oscar and Dr. Garamelli, for including me in this conversation. All my opinions are just that. They're my opinions. They're based on a lot of thought and a lot of a lot of research, but some of this is speculation. And I think there's a world for unregistered securities. There's certain asset classes and certain businesses which can only be properly backed and used with a traditional, more unregistered securities. And there's also room and a growing room for fully registered securities. And that's the world that we're looking at and really moving into. So I encourage all of you to get into conversation. We're just trying to figure out how this works, and we're trying to build a community of people, just like what equity crowdfunding is. It's opening up investing to a larger group of people. You don't have to be part of the 7% club all of a sudden to build a company, register your RegA, and get it prepared to go public. So the whole idea is this: like, together as a community where we work together, share resources, and share ideas, we're most successful. And I really thank KoreConnex and these gentlemen for the amazing work they've done. Definitely, they expanded my brain massively. So I recommend that you reach out to them if you're interested in this, because they're definitely leading the charge.
Well, we didn't expect that, but thank you. It's usually educational, but Karan, your last comments and remarks.
I have one big key takeaway for people. Number one, obviously, Walter, thank you for joining us. It's been a great pleasure talking to you, and we learned a lot, of course, from, because you're a very practical-minded business person, entrepreneur, so we learned a lot. But the one thing I do want to say, I also love, as a chief scientist, all of these wonderful speculative, what else can we do kind of things. But I also do want to emphasize that many of the things that we're talking about are actually realities. It's not like we have to create the infrastructure or the engineering for this. It exists. You have an idea for a stable coin, we can make it happen, right? I mean, these are not speculative. These are practicalities. These are not pilots. These are in production systems that we have today. The engine's up. It's been started. It's running. You have to sit in the driver's seat and hit the pedal.
Wow, that was great. So listen, in closing, we went over a little bit. I want to thank everyone today for coming out to the KoreSummit webinar series. If you're interested, we have another one this afternoon at 3:30, Regulation A, end-to-end. What does it mean? It's amazing that we're actually able to have these kind of discussions. And again, if you want to watch any of these videos, they're available to you for free at our YouTube channel, KoreConnex, or you can go to our educational channel, KoreSummit.io. Thank you, everyone. Have a fantastic week. Walter, Dr. Grant, as always, looking forward to